Hello traders, and welcome back to another video. I hope you are enjoying the content in this channel, and if so, please don't forget to like and subscribe. Risk comes from not knowing what you are doing. Warren Buffett. I want to start the video with this quote. In trading is very important to master your own strategy. In this way every trade that you will take will be well defined and not random. Risk management is what separates a trader from a gambler. If you have weighed the pros and cons of a trade idea and you have a trading plan in place, then you are simply trading what you believe are favorable odds. In this video we are going to show 3 consecutive setups, 2 of them using the same confluence to enter a trade, and on the last one cheating. But even though we might enter a premature entry sometimes, risk management is going to protect us, so don't worry about that. In the end of the day you must love what you are doing, so enjoy being a trader. Being a trader categorizes you as a strong person who is not afraid from challenges and difficulties, because the trading is one of them. It's not an easy path. Let's continue with setups. As we can see, we have here an uptrend and price seems like it topping. We can say that by looking at the double top formation. Before shifting to our setups that we traded, we can break down a case study here. We have a liquidity zone with a well-defined demand below it. Price touched the demand after a liquidity swept. This setup could offer us a 1 to 3.5 risk-reward trade, that is perfect ratio. I want to underline, the setup that are going to break down right now is a personal one, we didn't share on premium channel. I want to be as much as I can transparent with you. We shifted on 1 hour time frame to highlight the major zones. We noticed here a supply zone. Let's shift again on our favorite time frame, the 15 minutes. Recommended broker is Hanko Trade. Hanko Trade is offering a diverse range of trading instruments and services. The most prominent advantage of Forex trading through Hanko Trade is the offer of low spreads to its customers. You can open a live account in seconds because no verification is required. Fund your trading account with any of the major cryptocurrencies as Bitcoin, Ethereum, Tether and more. Hanko Trade's matching bonus option allows clients to enhance their account margin. The amount that is deposited by the client will be matched and credited into client's trading account. Sign up with the link in the description and deposit to receive your guaranteed 100% bonus. We have here a supply zone created at the bottom of the major one. We didn't enter a trade in this moment because we weren't monitoring this pair yet. When we started to analyze the pair, we have the current state of market. Price created a liquidity level just below the supply zone, so the swept of liquidity will correlate with supply zone, more chances for the setup to succeed. In this case I used a pending order just above the liquidity, at the bottom edge of the supply zone. We are here on 5-minute time frame. Our final target is the support level below, around 1 to 2 risk reward. My target gets hit, but the bearish momentum was very strong, and price continue in downside direction. We could make more from this setup, but I didn't change my target, and 1 to 2 risk reward was enough for me. If we remove the lines and look at the naked chart, we can easily notice a head and shoulder pattern. We can measure the target of this pattern, and we can see that market completed it very precisely. Sometimes I miss the chart pattern analyzing, but trading the zones has shown to me more profitable. This is why we are sticking to it. Let's continue. This setup we shared on the public Telegram channel. So, I hope you made some profit from it. We marked the newly created supply zones, and both of them have a liquidity level below. Both zones are qualified as entry levels, we just need to wait for market arrive there. After a liquidity swept below, price bounced aggressively in upside direction, breaking above the liquidity trend line. But as we can see, our order didn't get filled, price didn't touch the supply for few pips, and dropped. Automatically we can consider this high as a new liquidity level. We have now almost the same setup as the previous one. Price swept that new liquidity and triggered our sell trade. We had an instant rejection. Price reached easily the 1-to-1 reward level. We moved the stop loss to break even, and instantly our trade was a risk-free. I managed to close it at 1-to-3 risk reward. But for what happened next, I feel a little bit bad even though it was a profitable trade. As we can see price continue in downside direction, I should have moved stop loss in profit and closing partially, not entirely. We had important news event on US dollar. Right after the news we had an insane sell-off, and in total the outcome of the setup was a 1-to-14 risk-reward ratio. And the sell-off continues to a final outcome of 1-to-17 risk-reward ratio. Being sincere, I have never held a trade more than 1-to-7 risk-reward. So, all these reward that I mentioned are hypothetically. Reaction on live market changes a lot from reviewing them later on. But with a trailing stop, we should have had closed the trade in much more profits that we currently did. But in overall was a successful setup, and I am fine with that. Every trader should analyze their trades and find what to improve in the future. During this strong sell-off, price created a supply and imbalance zone. As expected, price formed the liquidity level underneath. Price was consolidating above the support level. In this moment we decided to enter a buy trade, even though we should have wait for liquidity swept and consider a sell trade at supply zone above. I must accept that was a little bit premature entry. Price dropped and filled the imbalance zone below and swept the nearly created liquidity. We didn't stop out for few pips, and I thought that trade will take breath for a moment, but as I always say, sometimes the market has other plans. Price dropped again and stopped us out of the trade. As we can see it pull back the 50% of Fibonacci. I must admit that our entry was early, because most of the pullback retrace at the 50% territory. And ironically, right after this event price bounced in upside direction reaching our potential targets. This is the reality of trading. We don't always win. Sometimes you will miss the take profit for few pips and trade reverse against you. Sometimes you will miss the entry for few pips and then set up play as you planned. Don't get mad, accept this fact and move on to the next trade. Thanks for watching the video till the end.